It's recording. Okay, good. It's recording. All right. Let's rock and roll. All right. Good evening. So, guys, as you know, we are running the call early today. Obviously, NBA Finals is going on. So, and go Cavs. All right, but we're gonna rock and roll. I see some people having issues trying to log in. I don't know what to do about that. Like we always like to say, it'll be posted on our Facebook as well as our YouTube. Um, for the call. If you have any questions, always feel free to chime in. You should have an option where you can raise your hand, as well as you also have an option where you can go into the chat. So any questions, feel free to chime in, talk to me, stop me, let me know what's going on. But if not, because of the time crunch, I'm going to move forward. So again, we want to thank whoever's on the call now, and then of course everybody who logs in later. Always remember that any questions you guys have, like you've been doing, send it to us at C.E.I.L Group. That's C.E.I.L group901@gmail.com, or on our Facebook group. Any questions, stock tips, all that kind of stuff, guys. You know, we do a good job of kind of putting that information out there. All right, so today's gonna be a real quick call. We're gonna go into some of the early money market stuff, jump into some strategy, and of course, the last thing we always end with is our stock picks for the next week to the next 2 to 3 weeks. We got some real good ones. Some of them, if you've been with us before, you're familiar with. If not, we'll try and get you in as quick as we can. So first thing we always start off with is our disclosures. Obviously, we want to comply with the SEC standards. We are not your professional financial advisors. So of course, anything that you're learning from us or anything you take from us, do make sure that if you have a broker or somebody you go through, an advisor, go talk with them, or do your due diligence before investing, because there's obviously a lot of risk that goes along with the market, and also a lot of reward. So again, I'll just let that ride for a minute. Again, we don't promise anything. We don't support or promote any companies or anything. We're just promoting ourselves, and nothing we do is affiliated with anybody else. First thing we want to start off with is kind of an overview of how to get started in the stock market if you're not there. If you are kind of there and you're wondering, okay, what are some tips I need? First thing is always going to be, guys, the financial aspect. You're dealing with a financial instrument in stocks, or foreign exchange, whichever you're playing with. But the key, guys, is to make sure that you have your financial house in order, or in totality, and make sure that you're kind of covering all your bases. First thing is going to come along with the savings and credit. So we always give advice, again, managing your money. If you're in debt, it's going to be, people look at investing as the way to get out of debt. You can do it, but it's very hard. Investing is more of a tool to allow you to take money you have now and make it worth more, whether it's a short amount of time or a long amount of time. So making sure that you're understanding how you're saving is key. But first thing we want to talk about, which is more key, is going to be your credit. Just knowing that how credit is calculated, guys, just matter how you borrow money. So for my U.S., this is mainly for my U.S. People. If you're overseas, of course, you still have credit, but with different standards. But in the U.S., guys, make sure you're paying your bills on time. You're not going out and getting lines of credit from stores and things of that nature, that you're reducing your amount of lines of credit out there. So guys, if you have a lot of credit cards, or you think you need a lot of them to survive, you need to reevaluate how you're spending your money, because most likely you're spending more than you're making, so you're using credit to supplement that. You always want to make sure that if you can, try to pay down the majority of the credit limits and avoid trying to go out and seek more credit, because actually those hard inquiries take about 2 years to come off. And so it's very important that you're up to date on what your credit score is. They got free things through Credit Karma. You can do all these things, guys, but understanding how that is calculated and how that affects you for employment, housing, getting a car, even getting, like I said, employment, getting a job nowadays. Some positions check your credit. So, guys, make sure you're paying those bills as early as you can, not paying the minimum balance. If you've been doing well, negotiating a better rate. And then again, try not to miss any payments. But if you do, see if you've not utilized, any kind of one type of forgiveness now. And then something I always want to recommend to people, going to read The Automatic Millionaire by David Bach. Also, Rich Dad, Poor Dad by Robert Kiyosaki. Again, or Getting Out of Debt by Dave Ramsey. Again, somebody who giving you a great opportunity to learn the mentality of getting out of debt. It's not always about, taking a bunch of money and paying things down. It's having an approach and sticking with it. Work your small bills off first. So things like medical bills, little things, pay those off first. And then once you paid off all the little bills, you start to chop away at the big ones. And then with credit cards, try not to add money onto it while you're chopping it down. Just quick steps, guys. Being realistic and being specific are very key. Knowing what you can do and making a budget, knowing what the time frame is. I always recommend if you're doing like a plan, start off with a 2-year plan, 40 to 24 months, and then if you want to adjust it, work your way down. Where do I want to be 6 months from now, which would be the first quarter? Where do I want to be a year from now, halftime? Where do I want to be 18 months from now, the third quarter? Where do I want to be when the game is over, 24 months? And then you just attack it at a 6-month pace. 6 months go by very quickly. The beginning of the year just started, and we're already in June. So we're halfway there. And again, when you're making these, being realistic, specific, and taking your time, you're also making sure you're applying consistent action. Sometimes you have to make your little box lunch, or you won't be able to travel as much, or you won't be able to buy as many new clothes, or buy the newest shoes, or install something in the car. You have to make a lot of sacrifices if you really want to get to the level where later on you're not having to make the sacrifices. And then again, if you're a screenshot, you can get our 6 steps, very quick way. But again, we're going to roll through. We always talk about tips to be investors. Some of the quick ones that are very important to elevate your mentality. So reading, just a vital part of being able to learn this business is being able to understand how other people have attacked it and they failed and they succeeded. Being patient, or being the ability to wait, is imperative. Being able to lower your debt before committing to aggressive investment. If you have a lot of credit card bills and outstanding loans and debts, get some of them in order so you know how much a month you need to kind of handle those expenses, and then have a honey pot for your stock. You need to be always putting money into your brokerage account. That's the only way you're going to truly grow it. If you're just relying on what you put in a month, 2, 6 months ago, it's going to be very hard unless you're just winning consistently, and that's not the case usually. Make sure you guys understand actions have reactions. If you're trying to shortchange it now, it's going to cost you later. Time management means being able to do a lot of things in a little bit of time and kind of being scheduled. I live by the schedule on my phone, so that's something I always recommend people, being able to know for 30 minutes I'm going to do this and I won't be interrupted. For an hour I'm going to do this and I won't be interrupted. And watch how your weeks get more productive when you're able to attack something, as opposed to I'm bouncing here, I'm doing that, I'm not really caring about that. For investing, the market is most open, most active when it opens. Guys, do not be greedy. If you see profit, take it. I say that so many times because we see cases of that. For the guys who are watching this recording, when you see profit, take it. All right. And then spend time on personal development. That's with your family, working out, reading things that are not related to maybe work or the stock market. Trying things you've never done before. These painting and pour classes, going to the park, Tai Chi, join a book club. Things to elevate your mentality, but also to personally grow you, because you'll be very surprised what connections you'll make in these other fields when you start to kind of open yourself up. And you'll see how it translates maybe to your investing world, allowing you to be diverse. Before we jump into the stocks, I said on the last call that I would go over some basic intro stuff, you guys. So for our new investors who are watching this, again, if you're watching this on YouTube, make sure you like our page and subscribe. If you're watching this on Facebook, you can go to the C.E.I.L group on Facebook. That's our page. Public, open, everybody like and follow us. You get the links for when we do these classes for free. And hopefully this helps you. There's somebody you can tell about it. Let them know. We're just trying to spread the word. We talk about getting into the investing world, and something that if you take on any of our courses that we go over all the time is supply and demand. It is what drives the market. So I said that I want to make sure I kind of give you guys an overview on this. And again, it's just very quick. It's very related to economics. So if anybody was an economics major, you're going to sound familiar, but you want to adjust your mentality, because we're not talking about business in the sense of the world or transactional business. I walk into your store, I am the demand, you have the supply, and I get it from you. We're looking at supply and demand on a seesaw. And really, supply and demand want to be balanced. If you look at the bottom here, we refer to that as market equilibrium. So again, if the market is on a seesaw and supply and demand are the two, outcomes that determine that, the market wants to be at equilibrium, wants to be balanced. But it's very important to understand that Even with the market trying to be balanced, buying and selling are always occurring. So real quick, and again, this is my little example of that balance between supply and demand. When we talk about demand, we talk about the behavior of buyers. So a question that we got from 2 weeks ago was, what stimulates demand, and how can we basically take advantage of what it seems like you're trying to ask. So again, guys, supply and demand are always working together in the market. So when we talk about people, when we talk about the behavior of buyers, that's the demand ideology or the psychology of it. Buyers, or so some people say, well, what are buyers exactly? People just want to buy something. The stock and economic definition is going to be buyers that are willing and able to buy some. People who are willing and able. If a phone costs $1,000, but it's the best phone that's ever come out, if I ask you, would you buy this? You would say, oh yeah, I would buy it. But I say, okay, well, do you have $1,000 right now to buy? You're like, oh no, I don't have $1,000. No, I don't can't. Well, then you're not considering the demand. So, when we're analyzing companies and we're looking at demand side, we know that this is the buyers who not only are willing to buy it, but they have the means to. And then we talk about the law of demand. Again, you economics majors, we've heard this so many times. Think about it. As the price of a good increases, do the buyers want to buy it, or are they going to be less interested in buying it if the price of something increases? The law says that the quantity demanded of the good will decrease as the price goes up. So the more people that the price of a product goes up, this phone goes from $100 to $1,000. We know that the amount of people who want it, the demand is going to decrease. So in the stock world, if buyers do not want something, remember, either you're buying or you're selling. You can't be in the middle. So if buyers do not want something, what are they doing? They're selling it. They're getting rid of it. They're giving it back to the company. They're putting their shares back into the market. So just again, understand that when we talk about demand, we're talking about the behavior of buyers who are willing and able to buy, and they want to buy when the price of a product is lower than higher, because we want to get in when the price is low. Buy low, sell high. Very normal. We talk about the supply side. Again, if the demand is the behavior of the buyers, supply is the behavior of the firms or the sellers. We're not talking about individual people selling something. We mean entities. So we talk about if a bank is selling you something, you're going to get a home loan, just because you're getting it from the Bank of America on Winchester, you're really getting that from Bank of America Global. You're getting a loan from that firm. They are selling to you the opportunity to have more money than you really have for you to purchase a home. So we analyze the firms when it comes to the supply, because they control, in essence, what comes into the market. So if I'm losing anybody, make sure you let me know. Always tag. I have some aids. We can email you to you. Make sure you contact us after. You can get that from our Facebook group. If you're on YouTube, we have a link in our link up there. You can get to our website, and if you go to contact us, that'll directly email our site coordinator. Any questions you have, we'll make sure you contact us. And if you're on YouTube, make sure you like, and also like and subscribe for any of our other videos that we put out. Of course, all of our videos we record for you guys. So we talk about supply again, or the firms. So we talk about the banks or your retailers or your car lots or your manufacturing companies, and they want to sell a product at the highest price possible. So we talk about the behavior of a firm. We talk about the sellers. We talk about who is a seller. Well, you have to not only be willing to sell to me, but you have to have the product to sell. So obviously we know these companies are going to sell to us. They're on the market. And then we talk about, as the price of that product or the underlying increases, the quantity that goes out into the market will increase. Meaning, if I'm selling these phones at $1,000 a piece, and the phones now go to $2,000 a piece, I'm gonna put as many phones out as I can, because I want to capture as much traffic at the $2,000 price point as possible. So understand, as the price of something goes up, the firms want more and more people to buy it. And if people are buying it, then the demand is there. And when those two things are working together, we have, we have a price motion that's going to go upward. All right. And we talked about it earlier. If we have a place where the demand is low, people do not want it, they're going to be selling. That's when we see the price point starts to move in a downward angle. So again, Next slide will kind of bring it into focus. But remember, guys, the market wants to be at equilibrium, wants to be lined up. Can you guys see me yet? Market wants to be at equilibrium. So it's very important that you know when you see the market at equilibrium, what does that mean? Buying and selling at that moment are equal. That will never last. Sideways motion from a stock, and I'll show you an example, indicates a up and coming change, whether to the up or downside. We don't know, but we know that when the market is equilibrium, the buyers and the sellers are trying to load up their side of the seesaw so that it can shoot through the roof, or it can have a lot of movement. So again, that's kind of the psychology of buying and selling as far as supply and demand in the market. It may be confusing to some of you new people. I recommend going to Investopedia. I will give you guys, and guys, yours know I always give you this at the end of the link. At the end of the class, I'll put some links up for you guys, screenshot them. Just websites you can go to kind of learn on your own. Always feel free to reach out to us because we want to kind of adapt, change the mentality of our youth, which includes us, our 20s and 30s and even 40-year-olds, because the world's going to look very different for us in 30 and 40 years. It's not going to be where we're going to retire and sit back on our pension and be happy with it. You have to be cognizant of what's going on globally. And if you're not, wherever you are, it's not just for U.S., it's for our European and our Asian students who are also listening. You guys know what's going on, especially in countries like Venezuela, countries like China, where, again, there's an aggregate push to increase manufacturing, increase the yen and make things work over there. And every country right now is trying to get into an economic trampoline mode where they can take off. So it's very important that we know what to look for and what is possible for us moving forward in the future. So we kind of talk about supply and demand. The most key portion of supply and demand for us as traders, especially as retail traders, meaning we don't work for a big firm, we do the work ourselves, is going to be demand. Because again, that is the market motivator. The companies are going to always sell something. That's their job. It is the part that's kind of shifty is who's buying it. And of course, we're the demand. So I always like to give this representation, low and high demand models. When you're able to understand these guys, it makes trading on the market much easier. We talk about the movement. So if you see DSV is always going to be the acronym, demand, supply, value. All right, and same thing here, demand, supply, value. That's the flow. So when we look at low demand, for people who are recording or from watching this, if you go back, we have some other videos that explain demand and supply and demand in much more detail. So I'm not going to go too in depth about it. But again, we talk about demand, buyers. If the demand is low, so notice demand is below supply, it's on the low end, and it's moving up towards supply. We said that there's a low demand, which means there will be a high supply. If people are not buying it, the demand is low. That means they're selling it. If they're selling the shares back to the company, there are more shares in the market for us to buy. Now, if I have 1 million computers and then people return 1 million of them, and now I have 2 million computers, am I going to keep the price the same to sell them, or am I going to raise the price to sell them, or will I lower the price to sell them? If anybody said lower, you're correct. So think about that relationship. The more shares I have, the lower the price I'm going to have to make it so people are interested again. Because in the stock market, the only thing that drives demand or buyers is price point. If we feel that the stock is at a discount, we're going to buy. If we feel that stock has gotten to a point where we're making profit or that's the peak, we're going to sell. So it's very important. So buying and selling is always happening. But there are moments when they are together at the same time, equilibrium, and that lets us know a move is going to occur. So when we see this flow in the market, meaning people are selling the shares or the price of the stock is going down, the value is decreasing, this is a selling action in the market. People are selling. So this may be a good opportunity for my options and short stock traders to short or do a put on a company in a selling demand market where it's low demand. Well, vice versa on a high demand, people want it. Apple, people want it. What is occurring? Demand is high. It's on the high side. So that means that people are buying. Do we have as much product in the market, as many shares to buy? No, we don't. So because we have fewer shares to buy, that's going to increase the value, meaning that the price of the stock will go up. Very simple model, but if you don't understand it, you're going to think the market is just moving. But when you understand demand and supply and you can see factors that accrue with it, then you know, okay, right now people are buying because this is going on. Eventually it'll get to a certain point and it will fall. And so we know that this is when people are buying in a high demand or the price is rising, it's going up. So in this case, when the value and the demand are low, we know people are selling it. And in this case, when the value and the demand are high, people are buying it. And so we see the correlation that happens in the market mentality, that there's a direct correlation between us wanting to buy something and the price of it. The more people that want it, the higher the price will be. The less people who want it, the cheaper the price will be. And then there's an inverse relation between demand and value and supply. So the more supply in the market, that means people don't want it, which means the price will be cheaper. And the higher, or excuse me, the less supply in the market, the more people who want it, therefore the higher the price will be because there are fewer shares open in the market. So again, that supply and demand and then the demand values are key in understanding when you're looking at a chart. If you're looking at a stock chart and the chart is going up, again, this is for my beginners or my people who are less, inclined, if you don't know this, when you're seeing a chart go up, basically, or a stock chart wiggle up, this means that buyers have taken over the market. And they are driven by them buying shares and taking the supply out of the market. They're driving that price point up. Well, eventually, the buyers will get tired. They can't sustain this motion forever. And then what happens? The stock falls. It may fall a little bit. It may fall a lot. Or it may bottom out. These are all possibilities. But based on if the stock goes up, goes down a little bit, goes down all the way, or bottoms out, will determine what environment you're currently in. Because when a stock, for example, goes down a little bit and then continues upward, you're in the zone of what we call a continuation trend. That means if you looked at it over a long period of time, it's going up, small blip down, it keeps going up. This is a good sign for what we call the bull or upward moving market. When we see the market do the secondary, goes up, then it comes back maybe right to where it was at. At this moment, we're looking at sideways motion, or we're looking at market equilibrium. How do we know that? Because the buyers equal the sellers when we see this. And usually this kind of motion will dictate to us that something is getting ready to occur. Maybe the stock is now going to start going downward, or vice versa. The stock is going to start going upward. All right. And then you have the last case where the stock bottoms out. All right. For a lot of my traders, you'll see this. Bad news will come out. Earnings will come out. No miss. Investigation. Anything will occur. A shakeup will happen in the company and it will bottom out. This is what we call a heavy discount. Heavy discount when you see this. Why? Because if this is a strong company and something just occurred and now it's $15 or $10 cheaper, this is an opportunity for you to buy in. But what you need to remember is, how far does this stock need to fall? Because based on the news, it could fall 30, 40, 50, 60, 70, $100, depending on the stock. So guys, it's very important that you start to learn charting, because if you do not understand the market trends that come along with charting, because those three scenarios I just gave you, all mean a different thing, and you have to attack them at a different way. So it's very important. I just wanted to kind of, again, I had a lot of questions. I was speaking about this before, and someone said I wasn't sure about supply and demand. But again, all right. So supply and demand, we talk about that. We talk about that relation. And then the last thing I'm going to talk on before we get to my favorite part, the stock picks, is going to be charting. So if you're looking at stocks and you start to look at these charts, okay, I'm a newbie, I'm a beginner. I know some of the stuff. I'm reading, I'm looking on YouTube and all those things. What you need to be spend the majority of your time researching is charting, support and resistance. All right, I can't go into detail into it because it is not a 5-minute thing. But the key is that when you build a house, there are two things that you have to know before you build a house. You have to know how high you're going to go up, and you have to go know how deep down you're going to go. So you find out how many stores you want. Then they say, okay, this is how far down the foundation we need to go. All stocks have a foundation. They have a ceiling and a floor. And so it's called the support and resistance. So if you guys haven't heard of this, my people who are watching this, please go research this. Investopedia, Barron's. There's so many different places you can go. Options Express. They have a great webinar tool that you can learn from this. And of course, the C.E.I.L group, we teach you all this from start to finish, but we also teach you other things if you take our course. We talk about the ceiling and the floor. The floor or the support is the bottom level that the stock will usually reach. And once it's touched that point, it's a hypothetical line, but once it touched that point, it's more likely to go from there and start going back in the opposite direction. And the same thing with the resistance or the ceiling. It's that upper limit that blocks the stock from just going through the roof. So the reason why this is important is because, guys, remember, if you don't know this, about 70% of the market is controlled by computers trading. And these computers are fine-tuned millisecond calculating machines. So they have been pre-programmed. When the stock gets to this point, sell. And when the stock gets to this point, buy. And so we utilize strategies that move with the market because as good as we can be on our own, we can't beat the casino, okay? And we don't try to. We try to work with the casino, all right? And in this case, the casino is a mathematical global bank account called the global market. And guys, if you're able to ride these peaks and valleys that occur from support to resistance, trading becomes even more easy because all stocks are going to trade within a certain range. And these are normal behaving stocks. So you can say 75% of the time, this is how a normal stock will behave. It's going to look like a snake. So very quickly, about 2 more minutes, I'll go into this, 2 or 3 more minutes, just some indicators. If we're looking at this, now this is not a stock, this is actually a commodity we sell, we buy and sell orange juice, come in the bush, well, comes like by the barrel or something. So this is the commodities market. So if you want to trade gold, palladium, iron, gasoline, petroleum, semiconductors, all these things that we use to run our world, this is one of the instances, but our analysis still rides the same. We look at notice there are some points where the stock will get to and it'll just go the other way. All right, so that's a zone like there. All right, we kind of see this right here. It kind of bounces off of this line a couple times. Down here, it bounces kind of a little bit. All right, so when you see a horizontal line, and you'll see that on some of our stock charts, you'll see a lot of lines. This is what this means. The straight lines are the true support and resistance, meaning that this is a point that has been tested numerous times, and if you go back far enough, at one point, this line was the floor for the stock, and at one point, this was the ceiling. Somewhere, if you go backward far enough, you'll find it. Same thing with this line. There's some other lines here you can see, but the stock will touch this line, go back up, touch the line, go back up, touch the line, go back up. It may break through a little bit, go back up. And that's natural. Stocks want to trade in a range. They like to stay between a ceiling and a floor. And it's just mathematical computations. The computer has purchased a lot of stuff here. It has an automatic sell order to sell here. And when that happens, guess what? The price drops, the computer buys more, or maybe humans buy more, price goes back up, they sell it. And this happens, or news occurs and the price value changes. So it's very important, guys, just to understand that there is a range that stock will trade between. I can't go too deep into this, but you're going to see this a lot. And if you're using FinViz, they're going to automatically give you the support and resistances, but it's very important to know what it means and how to do it. But I'm just want to give you a quick overview because you're going to see this a lot in a lot of the things we look at. So let's get to the last point. Any questions, any comments, concerns? Who do you guys have for the NBA Finals? Obviously, Cavs in 7. Okay. Support. What's going on, Ryan?
What's up?
Hey, man. Who you got for the NBA Finals?
I think Golden State gonna win, but I put my money on the Cavs.
Yeah, I got the Cavs. I think they got to do it like they did last year. They got to do it like they did last year. All right. So, guys, And Ryan is one of our members. He's one of our traders. He's actually one of our. Have you been looking at any interesting marijuana stocks lately? That sector is kind of looking interesting.
I haven't, but I just like saw a stock reference like probably like 20 minutes ago before I got on that I'm gonna check out.
Put in the private group, especially if it's panning out. Let us take a look. All right, guys. So first stock I'm gonna give you all. Actually, we got permission from one of our members too, Wendy, Amberella Inc. All right, so she wants to take a look at it. So obviously, I was talking about those straight horizontal lines, and we see this here. That's a support and a resistance. So that's a zone where it. And if we go backwards more, let me kind of go back and give you all an example. You'll see that there was a time where the stock was, above it, and then it crossed over, and then it bounced below, and eventually, in the future, which is now, it came back to that level. So this is called true support and resistance. But we use the trend line support and resistance and what that just means is currently the trend we're looking at maybe in a 1 month or 3 month zone. How can we analyze it and where are we at? That's more important for my short-term traders. So for like this example now, Amberella, I don't know if Wendy's on. If not, she knows, I'm going to have to record and post it. If we currently look at this company, currently at 59.22, we see they touched 65, which was their support. Their resistance. That was their ceiling. The stock bounced off that line, and now it wants to kind of make its way down back towards the $50 mark. It may not necessarily get there because if we're looking at it now, guys, from what I see, we came off a downward continuation trend, horizontal trading, flattened out, tried to bump up, flattened out. And so now it looks like it bounced out, and now it's building. It still looks like 65 is the zone for now, unless it actually makes some bigger movement. So for a stock like this is in its middle zone here. It's not at the floor, but it's not at the ceiling. Me, myself, I like to wait in those instances because I see a big uptrend previously. Big up. Just think about it. Went from 50 to 65. Looks like it was in about 3 weeks. So when you see something like that, you have to think, okay, it used all that energy to explode. How long is it going to rest? How long is it going to fall? How active are the sellers going to be before it takes back off? Once that stock takes back off again, that's when I'll wait to see where it caps at. If it caps right at 65, then you're probably going to see another downside. If it continues to break upward above 65, now we see that stock starting to, kind of outperform its range. And now we have to make a new ceiling because now 65 is no longer the ceiling. It may now be the floor. So this is one where, you kind of missed it early in late April where it kind of shot up. But I would even not be scared to buy now. But if I buy on an upside, make sure for options traders, make sure you guys are buying downside protection. If you're a stock trader, this is one you got to wait on. You don't want to get in on the inside, on the middle zone, unless you're buying maybe 2,000 to 3,000 shares. But at $65 a pop, I don't think anybody I'm teaching is doing that. But again, that's where Amberella is now. Am I saying that right? Amberella. That's where they currently are, mid zone right now. So you missed the movement. So now you got to wait and see when it makes its way back toward the floor. Once it gets around that $50 to $52 zone, you're good to buy. And if you're lucky and it touches the floor and then goes back up, obviously that's the best scenario. But yeah, very good one. A little high for the stock traders, so you're not going to get too much movement out of this. And if you are, it looks like it's taking about a month and a half to 2 months for those big moves to happen. So again, this is one you're going to definitely be a watcher. This is not going to be a hard buy for us. All right. Next one I've been talking about before. They blew up. Well, not blew up, but kind of had their sustainable motion. Twitter. Obviously, Mark Cuban, owner of the Dallas Cavs and billionaire venture capitalist, invested in Twitter a lot of money. Started tweeting about it, big movement, and Twitter's moving up now. I think the CEO, Jack Dempsey, also bought like 500,000 shares of the company. So we see it now doing sideways motion. So remember I was telling you guys about this. When market equilibrium occurs, what this means is that we have some up motion, but it kind of evened out. Buyers and sellers right now are even. So there's fighting position right now for what's the next move. If this stock continues on its upward trend, which is going to be pretty hard because it did some good movement pretty quickly, it's going to have to break this basically $19.80 range. It's going to need a lot of power to do that because look what happened. It touched it and it immediately started going down. So for my people who are trading this on a short term, if you get a bump up and it touches that support, that resistance, a short put would definitely get you some motion here. And again, this stock is not going to move $5 or $10. This is one that moves 50 cents to $1 a day, or 20. In this case, it's 22 cents recently. So don't put all your eggs in Twitter. Stock is cheap enough to buy for longevity. A lot of people are following the Facebook model. So we see a lot of social media companies getting into the retail and advertising sector. Twitter is one of them, especially with the Twitter Live and all that. So this is, again, one I'm watching because, again, I'm in this sideways motion. The moving averages look real good for the short-term moving average. But again, this is not one I'm getting excited at because it's only been since October since Twitter's been at 24. So it's $6 a swing. I'm playing this one long-term on the options market. I'm getting time out maybe until November. And if I'm doing stock, I'm trying to get at least a minimum of 800 shares. So again, at $18, $20 a pop, you're paying a little bit of money, but again, this is maybe one more of those value trades. This is not going to be a big boomer. You're not going to see Twitter do $4 or $5 in a day. So again, this is more value growth that we've seen. Another one we're talking about. Obviously, I don't know how much money you guys have made off this, but again, when we initially introduced it back in April, cheap enough just to get your hands wet. And again, I think it was at, what was it, $2.50? Yeah, $2.50. So we had a big spike, $4.50. We sold, made a good amount. And again, now that stock is working its way back down toward its floor. So again, this is another value, $3.94, and that's a financial, guys. So if you've been keeping up with the news, we know that the Fed has postponed Fed hikes or the rate hike because the job labor numbers came out for April and May, and they're very disappointing. It's different sides. On the public side, we saw unemployment rise. However, jobs in the private sector went up. Oh, it's okay, Wendy. No, you missed. And Wendy, I had your stock. I'll try and jump back to it before the class ends, Amberella. But guys, financials, they're in a shaky place because the Fed hike is not occurring. So anybody who's working in the financial sector, you guys may have seen, if you're in the commercial loan or personal loan department, the company was ramping up for you guys to get more loans out. And now you're seeing a taper in that position because, again, the Fed is not going to increase the rates as frequently. President Trump, bombed Syria, and they bombed this, and they got into Russia and all that. And so now we're seeing, okay, Wendy, so you were able to see it. Okay, good. So, and we see a lot of discord globally investment-wise in our financial structure. For you people holding long-term bank positions, as the stock keeps falling, now is the time to buy more. And there's a possibility of the big market crash because if you look at 2008 and 9 charts, they look very similar to where we are now. But guys, we have to remember also what was different about then and now. We didn't, there are a lot of people over hedging for buying homes. We don't have bad home loans. The home loan market has been regulated. The majority of these shaky loans are in non-banking lenders. So companies who are using their own money are really pushing the agenda. So, but what's on the other side? Welfare and student loans. So if anything's going to be another big bubble, it's going to be the loan bubble because we're talking about trillions of dollars of defaults occurring at a rapid rate. But again, SIEB or Silver Financials, one just been watching. A lot of good motion, especially for a value trader. You don't have a lot of money. This is one that you can watch. And, looking forward, the outlook moving forward is still going to be positive because growth is happening around the world. It's just being bottlenecked because we're not in unison globally. There's a lot of discord going on. So everybody's not getting able to take advantage of the bull market that we're at right now. And that's why it looks like the potential fall is coming. Facebook. Made a ton of money on Facebook. I'm actually not active in Facebook anymore. I sold out after the stock capped, and then I haven't really played it since. But this is another one, guys. Came off of value, so it's getting toward the ceiling. Facebook has, some room to grow. So if this is one that you're playing on the options market, very cheap to play, make sure you're buying time with this company. And guys, make sure you're waiting for these discount or these dips. When the stock falls, this is where you want to be buying. So if anybody doesn't know this, I just want to reiterate. When stocks go here, downtime, that's where you want to be buying. Or you want to be buying in this realm early. If you miss the downtime, get it early. But because most people don't know how long something's going to run up, I would always tell you, if you miss this, wait. Wait 3 weeks, wait 4 weeks. Don't be eager to go and give your money away to the market. Well, be eager. Let me know when you do it so I can make the other position and collect that premium you're going to give away. But make sure, guys, that you're getting these companies here. Yeah, you're going to have to miss all of this beautiful gold. But guess what? When it gets here and it starts to go up, cap it and get on and get up. And that's why it's important to know your support and your resistance, because if the stock gets to that floor, if it hits that floor and starts going up, it's going up, guys. Sometimes we make it too complicated. All right. Yeah, we make it too complicated. So don't. All right. Facebook's one you want to throw in there. I'm not going to talk a lot about it. And if you're trading, if not, it's one to watch. Weight Watchers. This is one that I was so happy to give the team, but I didn't know exactly how much we would make off. Well, how much it would boom. But it's been booming. And again, this one we gave early, came off a decline, and it's been on a rip ever since. So there's a lot of downside to something like this. But again, we know that there's new CEOs in the game for Weight Watchers and all these things. They brought a big lady from QVC, one of those shopping networks, to kind of run the company. And she's all about horizontal visibility. So Weight Watchers, again, not too expensive. This is a stock I would buy. Every paycheck, I would just kind of put my money in, or I would wait till the next big fall happens and then get some of it. You don't have to be eager to buy. Just because you have money doesn't mean you spend it. You wait for the best opportunity, and that's on a downside when it comes down. All right, this is one we got from a member, TrueCar. I gave this stuff to you guys back in. If you look back when, kind of had a downside and ripped up. It's currently trading sideways. So with the summer market and the labor numbers coming out, I don't know if more people are going to be buying vehicles. So this is one, again, you want to watch. But, again, a lot of these stocks you guys are choosing are great value stocks, $17 a share. You're not, burning the bank up to play this position. And there's, again, a lot of upside for this, because going into the summer market, we do expect more people to start spending money. But we're going to get the labor reports for June, and we'll see where we are going into the summer quarters. Guys, this one, everyone knows this one. If you haven't, this is your first time on the call, you don't know, but all my other people, I can't even talk about it. But for your blessed and holy luck, Fizz has gotten back to its ceiling. And this company has been just pushing the envelope. So this is one that you guys want to maybe get ready for a short on, and then when it bounces, it's going to head back up. But this company is prime for takeoff. Sorry, guys. This one's prime for takeoff. And then one I have to always give you guys, biotech. We've been doing good. I don't know if Logan's on the call, but he's our biotech guy. And this is an ETF, guys, you want to watch consistently. You miss the downside, but it's still a lot of upside to go. I think it's going to get to 300 and kind of bounce back. That's kind of what it's been doing. I've been doing that. But if there's some big pharmaceutical things happen, we're going to go into a big jump. That is the end of our class. Feel free to contact me, email me. I'll reopen the class maybe just for another 15, 20 minutes. If you guys have any questions, you can re-log back in.